The factor that I would like to give the audience just a little bit of an update on what we mean when we use words like QE. That means quantitative easing. Basically, that is like, okay, the country is basically opening up a credit card, borrowing a bunch of money, and pumping it into the markets as fast as they can. Now, we all know that banks are supposed to support that private business. But what has happened after this, and this is the extraordinary thing that I have still, after almost 3 decades of trading these financial markets, try to understand here, is why on earth is this market still at a 4,200 level on the S&P? Just for you guys that don't know, the Standard & Poor's index of S&P 500 is the United States 500 top countries by market capitalization. Okay, so that we're going to say that that's the creme de la creme of the U.S. Public companies. Now,
exactly.
These are trading as of a few weeks ago at record highs when one of the major economies in the world, China, has not opened its border yet. Japan is slowly getting there, and other countries are gearing up, and these markets are trading at a high. Here is why, or at least on my opinion, on why these markets are where they are and how fast this super bubble could pop. I don't think the worst is over yet, but let me just give you an indication that when you pump $3 trillion into the banking system, there's so much money that came in after this COVID situation that the banks, they did what they did best. They reinvested it into the stock market.
Just yesterday, I saw a chart, and it was a chart that showed the amount of money with the Fed chart, and the line. And it was like in 6 weeks, they pumped $2.6 trillion into the market in March 2020, which was like, and it was something about 80% of the whole money supply. Yep. It was created in the last 2 years, or just stuff like that, which the average guy, even me, can't comprehend the kind of numbers we're talking about.
When you quantitative ease, they are printing more money, and it is inflationary. Isn't that the truth today? We are seeing quarter after quarter after quarter of inflationary numbers that are just blowing records out. The rule book and the record book has been, blown out of the water, I think about 2 months ago. And everyone says, well, we'll get it under control. Well, let me tell you how the Fed can only get this under control. That's raise interest rates. If they try, I'm saying if they try, Mario, they'll raise interest rates. What does interest rates do? Interest rates then falls over to the property market. We all know what happens to an inflated property market, i.e., 2008 prediction by Peter Schiff. If you haven't seen it, watch his video. Peter Schiff was right. So, Mr. Ma, fire away. Tell me what's on your mind.
You psychically went right over to me when you mentioned Peter Schiff. That's what was running through my head. Listening to Peter Schiff telling everyone the Fed's going to stop inflation. This is Peter Schiff talking. The Fed's going to stop inflation. Don't make me laugh. If inflation is at 8%, you need 8% interest rates to stop inflation. We got 1% interest rates, and they're going to raise them by 0.5% and another 0.5% and another 0.5%. And by the end of the year, which is 9 months later, you got interest rates at only 3%. When you got inflation at 8 to 10%, how's that going to stop inflation? They're full of baloney. They're just continuing their money games. That's Peter Schiff talking.
Jesus, it's a scary scenario, for sure. It's a very, very scary scenario. And let's have a look here at what I'm putting on the screen right now. This is within about 30 minutes ago, everyone. This is the Eurozone. Inflation hits another record high as food and energy prices soar. This, as you can see here, guys, just right here. And they put that out, Mario, right smack before the future market gears up in the United States. There's a saying, put out the bad news before the show begins, right? Well, here it is here. And here comes the numbers here. Inflation came in at 8.1% for the month, according to the preliminary figures from Euro Statistics Office. Now, we are to believe those numbers are only 8.1.
Ridiculous.
Those could be much, much higher, if you ask me. And this goes into food, this goes into gas, this goes into, you know, the staples that people are, you know, basically having to live. And I've noticed these figures start to really rise. How have I figured that out? Is family starts to call you and say, hey, have you noticed the price of this go up? Or I tried to send you a package, then it normally cost me $20. Now it's 30. Or, you know, my mother would call, son, I just gassed up the car. It's usually 80, but it's 120 and my pension's not going to cover that. Wow. Fire away, sir. Go ahead.
Yeah, my brother is telling me he's back in the U.S., Scottsdale, Arizona, with his restaurants, doing okay. But he is telling me that the things of normal daily life he is finding are up 20, 30, 40%. And as an example, before the pandemic, he was going to put a new set of air. He lives in, you know, a typical nice home in Phoenix, Arizona. It's a bit of an older home, but still very, very nice. It's like, what, 25 years or something like that. And he needed to put in new air conditioners. And he got a quote about putting in the new air conditioning systems, which you got to do every 15 years or so. And he got the quote before the pandemic, and he got a quote, something like, whatever the heck it was, he said to me, like $8,000. And fine, he got the quote. And then the pandemic hit. I don't have to tell you that the pandemic disrupts everybody's lives in a number of indescribable ways. And next thing you know, 8 months, 9 months, if not a year or more has passed. And then, of course, he never did the air conditioners. So finally, it had mostly passed and things were getting back to normal. And he calls the air conditioning company back and he says, yeah, he says, hey, I got, you know, remember that quote you gave me for back then? Come fix my air conditioner now. I said, yeah, well, we'll send the guy out to re-quote that. And he's like, re-quote what? I got the quote right in front of me. Oh, no. It ain't going to be that. 13,000 from 8. 13,000, Alex, from 8,000. And not only that, but along the way, how much of an increase is that? Over 50%. But he's telling me that there's other items, like items that he needs to buy as a restaurant owner, that, wow, that's not available. The pizza boxes, they're not available. And if they are available, they used to be 8 cents a piece. Now they're 11 cents, this kind of thing. Alex, you say, yeah, you don't think about it too much. No, yeah. These are 20, 30% increases to the bottom line of the middle-class person's budget, who already, especially in America, come on, they're flat broke.